Hello accounts people, time to have a look at some sample calculations for receipts and payments for assets and expenses. We're focusing on the difference between the effects on the bank account and the effects on our final accounts. These are a little bit like incomplete records questions to start off with, and they're part of the preliminary work for a cash flow statement in financial statements for limited companies, possibly in a cash budget question for budgeting and therefore the synoptic, and quite a few marks in the cash and treasury management option. So let's have a look then. What have we got? A bit like the incomplete records question. So at the start of the year, 125,000. Sometimes you just have to put the numbers in and see what happens. Get the right number of zeros. Notice this is a carrying value account, so it's not a real account. It's not the cost and accumulate. It's effectively the two combined. Purely because this is the information that you will get, and that would have reduced the carrying amount of the machines. However, we're left with 162,000. Therefore, and it'll say ignore depreciation on the new asset. If we take that one off, we must have paid 51,500. So just that figure in the payment. Which figure is showing the profit and loss? So the 51,500 has come out of the bank, but it's a depreciation in our profit or loss account. So the difference between the two would be the 51,500 minus the 14,500, though we normally show them on separate rows. So another quick question then. So we're starting off with 345,650, and our expenses would have reduced that, but we've disposed of one. So notice again it's a carrying amount or carrying value. Just a slight difference in language, and that of course reduces the amount, so it's the cost minus the accumulated depreciation and end of year value. So actually all we've got to do here is work out what we're left with. And that is that figure. And then we made a loss and disposal. Again, disposals you're used to from advanced bookkeeping, transferring the asset and its accumulated depreciation. We haven't got those figures, we've only got the carrying amount, which is effectively what you transfer. So we'll put the 94,500 in. We've made a loss on it, which means the amount at the bank, not complicated maths, we must have received 80,000. So in the profit or loss, or how much was received, just type that in. What goes in the profit or loss? So the depreciation and the loss. In the bank, it's just a receipt. So in this case, profit or loss, our operating profit would have been shrunk by 70,000 depreciation and the 14,500, but their bank account's gone up by 80,000, so huge difference there. So let's just put this in a full-blown practice question on cash balances. So it's an Osborne practice paper. We've got a fairly limited set of accounts. Notice the operating profit before the tax, because you're now on limited companies at level 4. And we've got a series of bullet points to work through, and we're going to start off with our operating profit, work out all the adjustments, and starting off with our budgeted cash position, work out how much money we're going to end up with. So the first thing to work out here, the first row, was actually our inventory. Now our inventory, you can see we started off with more than we've got left, so that is good for our bank account. So we know It's shrunk by 600, and therefore reducing inventory is good for the bank account. Positive number. So what we've got next is our receivables. So we've got to work out quickly how much we've actually owed. It's the 645,000 sales divided by 12 times 2.5. So we owed more at the end of the year. That's not good for our bank. It's in their bank account, not ours. So the difference of 2,675, though it's not good for our bank account, so it'll go in as a minus. And of course the increase in receivables has no impact on our operating profit. And the same can be said, or very similar, for payables. We've got the numbers here though. The difference is this one's going to be a positive because we owe our suppliers more money. The money's in our bank account, not theirs. Not good for our relationships with our suppliers if we owe them more money, but it's good for our bank account. Again, the fact that we owe our suppliers more money has no impact on our operating profit, which is where we started off. So the non-cash items, well, we know about the one, I mentioned it earlier, is the depreciation. So we put that one in first, and that's just straight from the notes. That's always going to be positive. These of course can be the other way around, but this one's got to be positive. Depreciation, non-cash expense, is reduce the profits but not our bank account. But the other item is our loss, and we've got to do the calculation on it. Because of the information we've got, it isn't as showing as a separate row. What have we sold? We got 17,000 and it was worth 29,300. So we've made a loss of 12,300. Now that's reducing our profits but not our bank account, because our bank account has been affected by the purchase and the proceeds. So this comes in as a positive. And now we worry about the fact that we bought some and sold some. So the purchase is straight out the notes. It doesn't directly affect our operating profit, but it reduces our bank, and the proceeds was part of the loss calculation. But proceeds, yeah, not directly, but it's in our bank account, so our bank account will be higher for the fact that we sold 17,000 worth of assets. Now the corporation tax, this one causes a little bit more problems usually. It's just getting it the right way around, and it'll always be a minus symbol because it's always a payment, and of course our tax is below our operating profit and the table starts at operating profit. So we know it's going to be a minus, but how much is it? Well, the question says at the start of the year it was 33,200, so we owed that. And then we owe them another 26,500. Sorry, hang on, no, it's not the right figure. Get the right figure. This is from the accounts. But we're expecting to owe them 26,500 at the end of the year. So owed for the current year, owed from the previous year, but we don't owe that because we're not planning to pay it, or we don't need to pay it. So if we take the 33,200, add the 28,650 minus the 26,500, we've got the right amount, but actually that's going to be a negative figure because it's a payment and it's below the operating profit line. Always a negative. Could have done it as a T account. Sometimes it's a bit more logical, so whichever way works for you. So we started owing 33,200, then we owed another 28,650, and that's what we owe at the end of the year. So the 35,350, but we know it's a minus. So we've done most of the common adjustments, potential for one or two others, and based on those profits with all these adjustments, we now know that our bank account should have increased by 79,455 from our opening balance, so our end balance should be 120,455. So there's both mathematics, there's ones that are always minus, always positives, ones that could be positive or minus, and it's getting your head around it as much as learning the mathematics of the calculations from the information you're given.